Man, talk about a crazy year, y'all. 2020 is officially behind us. 2021 could be the year that anything is possible. And after seeing what 2020 had in store for us, I can only imagine things can go up from here, but I almost don't want to press my luck. In today's video, we'll be talking about a recap of 2020. Not 2020 the year. You already have enough news polluting your feed and everything else. No, we're just talking about real estate, how crazy of a year it was in comparison to 2019, see the numbers behind it, why it was such a crazy year, and what that means for the future, what 2021 should look like and what 2022 should bring. Before we jump into the video, let's jump into a new location real quick. What's going on, guys? Welcome back. We are here with our market update for 2020. Now, we thought 2019 was crazy. 2020 blew it out of the water. We ended the year in 2019 with 3.3 months of supply. 3.3 months is a huge seller's market. Make no mistake about it. However, when we ended 2020, we had 1.8 months of supply. Record low here in Northeast Florida. Now, if you don't know what months of supply means, don't worry, you're in good company. I know a lot of realtors that don't even get that number. Basically, it means that if we were to have no new listings at our current rate of buying these homes, how long would it take for us to exhaust what's on the market currently? The answer is 1.8 months. So we would be looking at end of March if no new listings were to hit the market. That's wild. Make no mistake about it. To put it in perspective, again, that is the lowest we've ever seen here in this market. On top of that, homes are selling faster than ever. Our average days on market is 50 days. Compare that to what it was this time last year, 75 days. That represents a third faster selling time, or 25 days sooner than it was in 2019. On top of that, if you want to look at median days on market, it actually jumped down from 41 days on market to 27, again, representing a third faster selling time. Make no mistake about it, if you are looking to buy a house, you need to be ready to move, and I don't see it ending anytime soon in 2021. So, we've talked about inventory shortage. We've also talked about days on market, how fast these homes are selling. But let's talk about price. And here's the real kicker. Not only do we have constrained inventory and homes are selling quicker than ever, we are actually seeing, if you look at year over year appreciation, 13% appreciation if you look at median sales price, and 17% if you're looking at average sales price. Now, these numbers are a bit skewed. That's why we take into consideration the median and average, but 13 to 17%, that is absolutely absurd. With all this information, sellers are making the decision to go ahead and sell their home. You can't really beat the fact that you can sell your home for more, 13 to 17% more, even if you just bought it last year, up to a third faster than you would normally. On top of that, you're selling in a market that has no competition right now. Inventory is so scarce. Now, the number of sold and pending listings are up 50% in some price brackets, in the most common price brackets we're seeing. That's crazy. And you just see the difference in new listings here to date versus sold and pending is astronomical. We can't keep up with the demand that's happening in this market. So even though we're seeing year over year growth in new listings, we're seeing a massive amount of year over year growth in sold and pending listings. With all this said, let's get into the reasons for this. Now, there's quite a few reasons that we're seeing so much growth in 2020 and why I think it will continue this way, at least for the first half of 2021. Number one is interest rates. By far, interest rates are king. Everybody wants to get into the market when you don't have to pay as much interest rate. And if you've seen my videos, you would see how much I rave about the fact that you should take advantage of these low interest rates. Interest is money you never see again. It is the ability to not only pay less, but also afford more home. If you don't get in now and interest rates go up but prices remain constant, you're going to be pre-qualified for less home. So if you think finding a home is hard now, Wait till you can only find maybe 20 grand less of a home. That price bracket's huge, especially if you're in the 200 to 300 range, which is the most competitive right now. With these interest rates so low, it's also cannibalizing the supply for us. Now, what I mean by that is the fact that sellers don't want to sell their home if they can get a lower monthly payment. The incentive for on-the-fence sellers becomes drastically in favor of staying in the house if they can reduce their monthly payment, maybe even take some equity out, whatever they want to do, move to a 15-year fix so they can pay off the house quicker. That is up to them, and they have that flexibility. That's what lower interest rates are doing to them. Conversely, they'd also have to compete in this crazy competitive market, and some people just don't have that tenacity or push to do so. Florida is one of the most migrated to states right now. We're one of the states with one of the biggest housing shortages, along with Oregon, Colorado, and California. Additionally, we're seeing this huge increase in remote workers. A lot of people are moving to Florida because they're trying to get away from New York, California, the busy city lives, and come to Florida because we have no state and local taxes. The weather's warmer down here. We have less regulations in terms of everything that's been happening in the global pandemic. And more people are just seeking freedom, and we offer that here in Florida. That is a huge incentive for people to come down. Also a huge incentive for companies who are paying those people to live in a state that they don't even work. They can work from anywhere. Why wouldn't you want to move somebody down, incentivize them if it costs you less in taxes because their tax basis is in Florida? They don't have any state and local taxes. That helps your payroll. That helps other business taxes and incentives. On top of the fact that we have an insulated economy. So while others were hurting during this global pandemic, our economy is focused on healthcare, armed forces, and logistics. That helps tremendously because all of those people were still in work when it comes to the global pandemic. They were still working their tail off. Logistics? Are you kidding me? Have you seen Amazon trucks right now? They're running like 10 times per day to certain neighborhoods. You also have UPS that couldn't keep up with demand, with holiday traffic. You have people shipping in stuff left and right from our ports. Healthcare workers, obviously, with a global pandemic, are going to be employed left, right, front, center. Armed forces don't stop ever. And thank you guys so much for that. You guys not only have to brave the forces that threaten our freedom, but you have to brave the fact that the pandemic is everywhere and you don't have certain protections when you go out on your missions or trips or anything of that nature. So thank you guys. Seriously. That about does it for our reasons. I think I covered just about everything. Let's talk about what the future looks like. I do think eventually we will get some buyer relief. And this will come in the form of, more tragically speaking, possible foreclosures. Now, we did see a lot of forbearances happen. About 6 million loans are in forbearance as far as mortgages go. And while that rate is decreasing and people are jumping off of forbearance because they have jobs now or because they aren't furloughed anymore, they probably won't be foreclosed. So while I do see a lot of doom and gloom from a lot of top industry experts, it is still economics and it is still very hard to predict. And I see a lot more signs that we won't get this wave of foreclosures that a lot of people are talking about. However, it is something to consider. That being said, we also are seeing a lot more new construction happening. New construction is trying to keep up with demand year over year. In February of 2020, so compared to February 2019, there was only about a 15% jump in interest in new construction. However, a study conducted by Zillow based on viewings on their website showed an 85% jump in interest in the months of June and July when the pandemic was at its height. So I still think new construction is going to continue to pioneer supply for us because they can continue to build new houses. And if they can start continuing to keep up with demand, if we can start importing more goods to build these homes, then we might actually have a chance of getting a little bit of buyer relief. But until then, we're seeing it trend downward. Another thing that can help increase the supply as well as decrease the demand for buying a new home is increased interest rates. Now, the chairman of the Fed, Jerome Powell, has come out and said he's going to do everything in his might to keep interest rates as low as possible to keep the economy churning. And with the appointment of Janet Yellen as the head of the Treasury by President-elect Joe Biden, I think we're going to see a ton of cash get infused into this market, keep interest rates low very artificially. I don't see interest rates rising. However, the market might respond to this inflation. We might see an increase in interest rates. We might see the fact that foreclosures happen. Could be an increased risk, and that could increase interest rates amongst lenders and investors that are investing in mortgage-backed securities. With all of this said, that would help not only decrease demand for refinance, but decrease demand for home buying. A lot of those home buyers wouldn't buy because it wouldn't be financially feasible for them. So, long story short, we have constrained inventory. We have 13 to 17% price appreciation year over year as of December 2020. We're also seeing homes fly off the shelf. They're flying off at about 33% faster than they did the year before. We talked about what it looks like, why these factors are happening, mainly because of interest rates are continuing to drive the conversation. We're also seeing a lot of migratory patterns. People are moving from these states that are more strict. They're working from home, and it's more of an incentive for them to move to a place with no state and local tax. We have a very insulated economy here in Northeast Florida. We're also seeing the fact that 2021 may be a continuation of this. I still think that at least for the first half of the year, it's going to remain this hard for buyers. And what you could do if you are a buyer is either take advantage of that low interest rate, but maybe not get into the house that you so crave and stay in there for 5 years. It might just be a short-term solution, but if you are looking for inventory, there may be hope come June. There's a lot more people that are interested in the real estate market when they don't have to worry about their kids being in school, and so it's easier for them to move. That means they can sell, they can move across town or move out of the state, but we're in a state with a ton of demand for our houses. We're in one of the 4 states that have the biggest housing shortage as of right now. I hope you guys found this helpful. If there's anything I can do for you, even if it's not real estate related, please reach out to me. You can reach me at 904-615-9007. If you have any questions about the real estate market or best practices, I'd love to help you out if you are looking to buy, sell, invest, or develop in real estate. That's it for me this time. Thank you so much for tuning in. I will see you on the next video. Have a great day.